Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Presently, the Australian dollar is somewhat in a recovery after bouncing in front of the bottom side of its call, which was seen around 62.80.90. And from there has alleviated significant downward pressure as its counterpart, the US dollar or the US dollar index, weakened and eased away from its 5-month high of 106.30 to 105.90. Looking ahead, Australia's March employment figures fell short of expectations, coming in at negative 6,600 instead of a forecast of positive 7,200, following a significant gain in February of 116,500 jobs added. The unemployment rate slightly increased to 3.8% after dropping from 4.1 to 3.7 in February. Traders are currently anticipating only 2 cuts for this year from the US Federal Reserve after a notable decrease from earlier forecasts of 6 or more at the beginning of this year. Keep an eye on how this market starts to unfold given the bounce, because we do need to see a break above 64.75.85 to increase the momentum and therefore lift beyond 65 cents and look towards this 60-day moving average, which is seen around 65.5. Until we get the break above 64.75.85, still keep an eye on this base, which is seen around 62.70.75 and also seen as the bullish foundations. The euro dollar strengthened on Wednesday as its counterparty, the US dollar, weakened, as I mentioned, from 106.30, a 5-month high, to 105.90. And looking at the current base, seen around 105.15.30, let's see if the market can continue the bullish drive. But the technicals are still somewhat lackluster. Do need to see a little bit more to the positive side to fuel a move beyond 107.10.15 and look on towards 108 as a potential target. A little bit of weakness is coming into the US dollar as the Japanese yen strengthened on Wednesday, and still presently no clear indication of intervention from the Bank of Japan, considering we're still lurking around the 1990 highs. Although I have no view to the top side, I am looking at a potential break of 153.70. This would give further indication to the downside and bring in targets to 152.5 and potentially to an objective which comes in around 150.5 and reassess from there. The pound strengthened following the British inflation data. The UK inflation eased to 3.2% year on year, slightly below February's 3.4%, but surpassing the forecast of 3.1%. Core inflation dropped to 4.2% from 4.5%, exceeding expectations. The monthly inflation remained stable at 0.6%, above the forecast of 0.5%. Based on the data, market traders may now extend their expectations for the Bank of England's future rate decision and widening the anticipation of a rate cut from June to August. But still, we've still got a bit more data to come, and let's see how it unfolds. And looking to the current pattern, it has improved slightly, but we do need to see further momentum and clear the 124.65 level to put it back on a trajectory of 125.15 to 125.75.80. A weaker play coming into gold and now looks towards this key level, and we do need to see a close under there of 2,366. If seen, could give further indication to the downside of bringing a target around 2,320 to 2,300. Viewing the top side, I still have no view, but the resistance may come in around 2,388 to 90. But as I mentioned, it's very difficult because of these spikes, and I'd rather not assess the top side due to the given bearish divergence and a very heavy RSI at MACD, so therefore does sway the bearish case a little bit more to the stronger side. A very weak play came into oil overnight and now crushing through the level that was looked upon as a target of $84 a barrel and now exposes a region of 81.70.90. Reassess from there as we could see further to 79.5. On the upside, resistance is seen around 83.90. But from the given signals, it does look like we are in a bit of a bear play, and keep an eye on how the market unfolds because there's no trend at the moment, but still the break of these supports do seem to trigger stop losses, so we could go anywhere from 81.70 or to 90, or as mentioned, 79.5. Well, that's a wrap. Thank you for joining me. And as always, look out the interest rate report. I hope you enjoyed the great start to the day.